Good evening, ladies and gentlemen. I am Pavitra, moderator for the conference call. Welcome to Avanti Feeds Limited Q2 FY21 results conference call hosted by KFin Technologies Private Limited. At this moment, all participants are in listen-only mode. Later, we will conduct a question and answer session. At that time, if you have a question, please press star and 1 on your telephone keypad. Please note this conference is recorded. I would now like to hand over the floor to Mr. Sherwin Fernandez from KFin Technologies. Thank you, and over to you, sir.
Thank you, Pavitra. Good evening to everyone present on the call. I welcome you all to the Avanti Feeds Q2 FY21 results con call. From the management, on behalf of Avanti Feeds and KFin Tech, we'd like to send out our festive and best wishes to each one of you. From the management, we have with us Mr. C. Ramachandra Rao, Joint Managing Director, Mr. A. Venkata Sanjeev, Executive Director, Mr. Alluri Nikhilesh, Executive Director, Avanti Frozen Foods Private Limited, Mrs. Shanti Lata, GM Finance and Accounts, and Mrs. Lakshmi Sharma, Company Secretary. I now hand the call over to Mr. C. Ramachandra Rao. Thank you, and over to you, sir.
Thank you, Mr. Sherwin. Good evening, ladies and gentlemen. We extend a warm welcome to you all for this investors conference call today to review the unaudited financial results of Q2 FY 2021. Along with me here are Ms. Shanti Lata, GM Finance and Accounts, and other team members, Mr. Venkata Sanjeev, Executive Director, and Mr. Nikhilesh Chaudhary, Executive Director, joining online from factory, and Lakshmi Sharma, Company Secretary. The results of Q2 FY 2021 are already with you for some time now, and we are sure that you would have already gone through them. Here are some of the key indicators from the financial results Q2 FY 2020-21. Consolidated financial results for Q2 FY 21. The comparative performance of Q2 FY21 with that of Q2 FY20 and Q1 FY21 have been given in the presentation already circulated. Gross income in Q2 FY21 is 1,150 crores, or 150.36 crores as compared to 982.76 crores. In Q1 FY21, an increase of 167.60 crores at 17.05%, and rupees 1,085.28 crores in Q2 FY20, an increase of rupees 65.08 crores at 6%, and compared with the Q1 FY21 is observed. The PBT is rupees 162.22 crores in Q2 FY21 as compared to rupees 147.01 crores in Q1 FY21, an increase by 10.35%, and rupees 140.54 crores in Q2 FY20, an increase by 15.43%. Increase in PBT when compared with the previous quarter is on account of increase in revenue and gross margin. Standalone results of feed and processing divisions are separately discussed. First we take up the feed financial results. The gross income for Q2 FY21 is 914.81 crores as compared to 849.82 crores in the corresponding quarter of Q2 FY20, registering a growth of 64.99 crores at 7.65%. The PBT for the Q2 FY21 is rupees 123.05 crores as compared to rupees 116.26 crores in the corresponding quarter of Q2 FY20, an increase of rupees 6.79 crores at 5.84%. In this processing financial results, the gross income for Q2 FY21 is rupees 238.16 crores as compared to rupees 235.83 crores in the corresponding quarter of Q2 FY20, registering a growth of rupees 2.33 crores at 1%. The PBT for Q2 FY21 is 40.41 crores as compared to rupees 23.65 crores in the corresponding quarter of Q2 FY20, an increase of rupees 16.76 crores at 70.87%. Implementation of shrimp hatchery. Long-awaited first phase of shrimp hatchery has been completed and commenced commercial operations from 13th November 2020. The capacity of the shrimp hatchery now is about 400 million seeds per annum, of which about 50% utilization in the first season of 2021 crop is estimated, fetching a revenue of about rupees 7 crores. Of course, this again depends on situation of shrimp culture during the first crop. The overall industry review, though the severity in spreading of COVID-19 reduced to some extent in the past 3 or 4 months world over, including India, it appears it is showing its aggressiveness once again in the form of a second wave. In India also, some of the northern Indian states experiencing rapid increase in corona positive cases. At a time when the global economy appears to be on the path of recovery, the impact of second wave is seen as a threat looming large. However, the news that quite a few vaccines for corona are in the advanced stage of clinical trials and a vaccine is likely to be available early 21 for vaccinating a larger population gives a big boost to the confidence of the people, which in turn helps recovery of ailing economies, including aquaculture sector. As far as aquaculture sector is concerned, about 25 to 30% fall is anticipated globally in this year due to impact of COVID-19. In India, it is about 20 to 25% fall. The shrimp culture in India started belated in this year due to shortage of seed on account of COVID-19 in the beginning, and during the period of culture also, effect of white spot disease was found on and off, reducing the overall production of the shrimp. However, as the farm gate prices are encouraging, the shrimp culture is continuing with the fresh stockings even now. However, the estimated production of shrimps this year is about 6 lakhs to 6.5 lakh tons. The shrimp production and the feed consumption in 2021. The shrimp production in India has registered a growth of about 10 to 12% at 8 lakh tons in 2019 as compared to 6.85 tons in 2018. Shrimp feed consumption has registered a growth of over 10% at 11 lakh 50,000 tons in 2019 compared to 10 lakh 20,000 tons in 2018. However, in view of the COVID-19 impact, the global demand and production is expected to come down by about 25 to 30% in FY21 compared to FY20. Basing on the present shrimp culture situation in India, the decrease in shrimp production is estimated by about 20 to 25% during FY21 unless the impact of COVID aggravates further in the country, particularly in the states where shrimp culture is undertaken extensively. Presently, notwithstanding winter season, the farmers have undertaken stocking of seed, which is about 50 to 60 days old, and it is expected to go into even December and January also, and the harvest is expected in January. Unless again, the caution is that some unforeseen development takes place because of this COVID-19. However, the company feed sales for 2021 is expected to be maintained at the same level of 2019-20. As you know, Avanti has not only been keeping its farmers base intact, it is also adding new farmers and new areas to its sales network year after year. During FY21, the company is also expecting to maintain its market share of about 46% to 48%. Coming to the processing division, the shrimp production and exports from India in 2019 was around 8 lakh tons. It is expected to be around 6 to 6 lakh 50,000 tons in 2021. The demand for shrimp has dropped globally by about 25 to 30% as an immediate reaction of COVID due to closure of restaurants, malls, and public eating places like food courts. It is gradually picking up, and due to increase in demand from retail sector, it is hoped that in a year or so, the stability will be restored once a vaccine is developed successfully. Continued focus on export of value-added products and exploring opportunities in new markets has been the main objective of the company. Operations of the industry in India. Recently, the government of India has capped the MEES, an export incentive for shrimp, to 2 crores for 4 months period from 1st September 20 to 31st December 20, which has been 5% of FOB value earlier. Further, it affects from 1st January 21, the MIS will be totally discontinued. This would be a significant negative factor for the exports, which is likely to have a cascading effect on farm-gate prices. However, the government is proposing to introduce RODTEP, a remission of duty and taxes on export products, scheme by which some incentive may be given to the exporters to compensate to some extent of the withdrawal of MES. The details of the scheme are yet to come. The government has recently announced PLI scheme to food processing industry to the extent of 10,900 crores, in which the ship industry is also included, fisheries sector is also included. Again, the details are yet to come. It is hoped that the stimulus packages and incentive schemes announced by the government earlier and now, the government would take these schemes take practical shape and help in the revival of the industry and support sustainability as soon as possible. I think with this brief background, we will now take up the question and answers from the investors.
Thank you, sir.
Mrs. Pavitra, you can just start this question and answer session.
Sure, sir. Thank you. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. I repeat, ladies and gentlemen, if you have a question, please press star and 1 on your telephone keypad. Participants are kindly requested to restrict with 2 questions in the initial round and join back the queue if time permits. We have first question from Nitin Awasthi from East India Securities. Please go ahead.
Hello, sir. Thank you for the opportunity. Just had a couple of questions, starting with the feed side. Could you shed some light on how the raw material prices are shaping up and whether what is the pricing of the feed going ahead? The selling price, I mean, and the prices of the raw materials, all the 3 major raw materials, how are they shaping up?
Yeah, let me first explain to you about the raw material situation. The raw material prices, as far as the fish meal is concerned, it is stable as we expected. The catches as of now is good, and the prices are almost on the same level as it was there in the November 2019. It is around 89 rupees or so, which has come down from 91, 92 rupees to 89 is the price that which is now there. And we expect that this will continue for some time. Except for immediately there is some cyclone that's now there, but for this short disruption in the fish catches, by and large the fish availability seem to be all right, and we expect that the fish meal prices will be below 90. It should be around 88, 90 rupees. That's what we expect in the next couple of months. Coming to the soya, initially we thought that the soya crop being very good this year, and we thought that there will be a substantial advantage in the pricing of the soybean meal. But however, due to the global situation, because particularly in the US, the crop was failure, the soya crop was failure, and in Brazil also it was delayed. So with this, the non-GMO seed is not available. So the demand for Indian soya has gone up significantly. And so even in the Europe also, the preference for non-GMO seed is actually adding to the demand for the Indian soybean meal. So the result is that the expected fall steep reduce in the soybean meal did not take place, and it continues to be at the higher level as of now. And we expect that over a period of time, the rate will stabilize. It is around, say, 45 rupees or 44.50, the one which we use. And if 43 to 45 is the range that we are expecting to continue. And initially we thought it would be around 41, 42, but it did not take place as of now. So coming to the third most important raw material is the wheat flour, which has it has come down by about 2 rupees. So the 2 to 2.5 rupees it has come down. So overall, it appears that if the soya production being good, if some stability takes place in the next maybe 1 month or so, the prices more or less will remain the same. Overall raw material cost, because these three raw materials contributing to majority of the cost of production, major cost of production. So if it will remain, it will be more or less as on the same line as was there in the corresponding quarter of the previous year. That's what our expectation. So that is the situation as far as raw material is concerned. As far as the price of the feed is concerned, it is as it now it's stable. The prices are there is no we don't foresee any upside or downside of this feed price, because we have to keep this price which we have received reduced recently in the long back recently. That will be continue, and we are not going to. We don't have any plans to reduce further nor increase. That is what is the status of the feed price.
Okay, sir, got it. So secondly, on the export incentives, if you could give us the absolute number of the export incentives booked, in which I would like the breakup between duty drawback and MEIS booked this quarter and the corresponding quarter last time.
Yeah, my colleague will just explain to you. Mr. Vichamarelli will explain to you the exact numbers.
In this quarter, MEIS we recognized around 10 crores and duty drawback of around 6 crores.
And the same period last year?
Last year, I don't have exactly figures right now, but total export incentives last year for the same period is around 28 crores.
Okay. And so out of this 10 crores MEIS that you have booked this time around, how much of it was booked in September?
In the month of September, we have not recognized anything. On the sales of September, we have not recognized. Since the government has put a cap of 2 crores and they have put a overall limit of 5,000 crores with a clause of downward revision in the case if the total MEIS claim by all the exporters exceeds. So we are not sure that how much we are going to get. So for that month, we have not recognized. For the month of September, we have not recognized any MEIS.
Got it, sir. And going forward for the rest of the quarter, for the next quarter, are you going to recognize any MEIS?
Based on the receipt, to the extent of 2 crores. If it is
2 crores, yeah, we will recognize 2 crores as there is a cap. Though we are
okay, sir.
Yeah, it is 2 crores we will recognize in the next this Q3.
Okay, sir, got it. Okay, sir, I'll join back the queue. Thank you for answering the question.
Thank you.
Thank you, sir. Ladies and gentlemen, if you have a question, please press star and 1 on your telephone keypad. Participants are kindly requested to restrict with 2 questions in the initial round and join back the queue for further questions. We have next question from Ashish Thakkar from MOSL. Please go ahead.
Yeah, thanks for the opportunity. Sir, specifically in the US, now since the elections are over, and now we have 2 events coming in, Thanksgiving Day and the New Year. So any comments you would like to make on how the shrimp demand is panning out?
Niklesh, can you answer this?
Hello.
Niklesh.
Yeah. So right now, all the shipments that are supposed to be for Thanksgiving and Christmas have already been shipped or already in the water. So as of now, there is no indication about how the Thanksgiving sales are as yet, because Thanksgiving is on the 26th of November. So we'll only get the data after the holidays and everything. So right now there is no data on how the full is, but we know that the stores are stocked up with products, and also there is news of surge in the number of cases of coronavirus in the US and restaurants being shut down for the second phase of lockdown. But so we need to see how the demand demand changes from the food service segment to the retail segment. Over the last 2-3 months, the food service segment again picked up with restaurants opening, takeaway, and everything. But with again some of the areas shutting down the restaurants, we need to see how the data comes out. So right now, it's too early to predict the Thanksgiving and Christmas sales.
Okay. And a related question was obviously what is happening between Ecuador and China. So now with Ecuador, exporting more to the US, is the economics against Indian companies? Overall, broadly, are the Indian companies losing market share in the US?
So Ecuador is definitely shipping out more to the US, but if you see like the amount, the quantity is still low. The base value is very low. The main reason for the export of Ecuadorian shrimp to the US is because of the ban of certain factories and also like almost the Chinese lockdown on Ecuadorian shrimp imports. So the factories still need to export to some market, and America being the closest, there are reports of product being dumped into the US, especially the headless shell-on product, which Ecuador specializes in. But as a competition to peeled shrimp and value-added shrimp compared to India, the volume is very low. Only we need to see how things come out. If you see, there are also reports of Ecuadorian shrimp prices being at all-time low, which is not favorable for the shrimp cultivation in the country. So we need to see how it pans out, how the Chinese market reopens to importing shrimp, how the Ecuadorian factories evolve to being a value-added producer. So these are the things that we need to see. It's a more macro factor right now, so we need to wait and see how it pans out. But definitely they are moving more products into the US market because they're not able to move it into the Chinese market.
Okay. But you feel, do we get the feeling that as and when China restarts, Ecuador would prefer supplying to China, or they would keep on dumping in the US?
I feel my opinion is that they would continue to work towards the Chinese market because the Ecuadorian shrimp enjoys certain premium in the Chinese market. The factories are built and they operate in a way for the Chinese market product compared to the value-added product in the US. So if and when the Chinese market opens, I firmly believe that the product will again start moving to China.
Okay, thanks. Thank you so much.
Thank you, sir. We have next question from Yogansh Jeswani from Mittal Analytics. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, you mentioned about degrowth that you expect in the overall shrimp production and consumption of, say, 20-25%. However, so far what we have seen in Avanti's result that in both Q1 and Q2 we have been able to maintain our volumes and the revenues both on the feed as well as processing segment. Now, given that Avanti from India's standpoint is a market leader and by a huge margin, so in a situation wherein we expect the industry to degrow by say 20%, yet we are seeing that Avanti in its commentaries consistently saying that we will be able to at least maintain the performance of FY20. So can you just elaborate more on how are we working on ensuring such performance for both feed and processing segments?
Yeah, as far as the feed is concerned, we have been making the quality, the performance, and we have been able to really stand out in performance of the feed and constant following with the farmers, guiding them, giving them technical assistance. And these are the factors which stand in favor of Avanti's products. So we keep getting conversions also from the others. And that's the main reason why we have been able to continuously increase our market share almost consistently year after year, and also with the pure performance and also with the technical assistance that we are giving to them. This is the main reason we have been able to, as far as the profitability and is concerned, it all depends upon the number one is on the quality, the raw material prices, and also the productivity, and all. In all these aspects, we have been able to maintain the consistency in our performance, and this is the reason why we have been able to maintain this market share and this the performance quarter on quarter. As far as the processing is concerned, as Mr. Nikhilesh explained, it is where we are focusing more on value-added products and all. We have been able to get this thing. I think Nikhilesh can explain more about the performance of the processing unit. Nikhilesh.
So this quarter, a number of our contracts have kicked into the US. Basically, the products that were supposed to be the contracts that we have informed earlier, those have kicked in the shipments and the realizations of the payments have started kicking in the last quarter and this quarter. Overall, it's the same story as what we've been focusing on over the last 2-3 years, that we want to focus more on value-added products, higher value products, and also the right customer and the right market. So this is what we're going to keep concentrating on doing, increasing our capacities, capacity utilization, getting into higher value products than what we're doing today, and also maintaining our good relationships and high quality with the customer. So that is our focus for the next few years itself.
And I may add to what Nikhilesh said, that we have more and more focusing on the getting orders from the regular suppliers on consistent basis. That also adds to less prone to any fluctuations in our market, because we have got a very good customers base. So we have been able to get the regular orders from them. That also helps us to keep our performance growing quarter after quarter. Okay.
Right. That's fantastic to hear, sir. So just to follow up on that, sir, are we also seeing any stress in terms of other industry players, because of the situation, that we are able to get some more market share out of them and be able to maintain our volumes? Is that also aiding us to maintain these volumes of previous year despite the degrowth? Is that a factor?
As far as the feed is concerned, we challenge from the competitors because in all terms, whether it is in the quality or the consistency in our quality maintenance, we don't have any challenge from any of the competitors, and we don't foresee any threat from them. We continue to perform like this, and we are very confident of this. We don't see any challenge.
Sorry to cut you, sir. Sorry to interrupt you, sir. What I meant to ask was, are we seeing any stress in our competitors that they are not able to deliver those kind of volumes because of the stress situation that the industry is facing, and that is helping Avanti to get those volumes? Are we able to pick up the volumes that they are losing because of the overall stress in the industry? That's what I was trying to get a sense of.
See, let me tell you the stress in the sense that when some of the competitors are giving more and more credit to the dealers or farmers, and there is a possibility that the stress on their working capital requirements. And because it is very difficult under this stress situation to recover if you go on giving on credit. That is one of the major reasons. In order to get some of the competitors have extended a lot of credit to the farmers and dealers, and the recovery from that, it is going to be a big challenge. Again, it is some sort of a cascading effect or the one crop credit has to get adjusted at least in the next crop. If you don't get adjusted, then the problem for the company to extend further to get the working capital funds that they require. That kind of a situation is seen more nowadays. That's what we are observing, that the competitors are finding this. So that is the stress that they are undergoing. I think that is one of the reasons why they have not been, apart from of course the quality, etc. That being always the advantage of Avanti. So the other players, though they have reduced the price and all those things, in spite of that, giving more and more credit in some sort of a stressed situation, not able to book the sales and all. That is one of the reasons for this. And we don't foresee any such things happening in our Avanti's case. We continue to have the complete control of the situation.
Great. That's really helpful, sir. So my second question is on the margin side. So now that given the volume degrowth, again I'm mentioning about the volume degrowth that's expected, and then the MEIS benefit going away. So do we see any significant impact on our operating margins for these processing segment and also for the shrimp feed segment? Secondly, another part related to operating margins for the shrimp processing segment is that recently we saw that this quarter we reported almost 16% operating margins, which is one of the highest that we have reported in the processing segment. And like you have mentioned that it's more to do because of the increased value added products. So going forward, can we expect this 14, 15, 16 kind of margin as a sustainable margin for processing segment? Or do we see any impact going forward because of the industry scenario or MEIS benefits going away?
The first thing is about the feed. As I explained to you, the feed, the major portion, the major contributing factor is the raw material. And as we have seen, because as far as the performance is concerned, the volume of sales is concerned, it is more or less we have been able to maintain year after year with the small, 5% beside that side, the variance we have been able to maintain. The quality and the price is also almost fixed. So we have with the determining factor of the margin for the margins is mainly the raw material cost. The raw material cost, as I explained to you earlier, we do not foresee a big surprise in the coming before the end of this year. The soybean meal going up further around 44, 45 range, and also the fish meal being that. So we don't foresee a big raw material cost jump up to reduce the margins. That's what we are expecting as of now. That's the thing as far as the feed is concerned. As far as the processing is concerned, it is always a kind of a balancing factor between the raw material and export price. Though raw material prices have been going up rather proportionately more than what the export prices are, but this is a part of the business that it keeps going. See, now there is a little shortage of material because the culture is on. So we are going to get more production in the coming months. Say January we have, then the prices may stabilize, and the margins may really improve. As if you look at this point of time, it may be less, but 1 month later, if the prices do take positions, stability sets in, then the profit margins also is it. But one thing is, we cannot assure that it is going to be 16%. It is always the demand and supply and the market situation. As Mr. Niklesh said rightly, we have to wait. We have to see how the so-called second wave is going to really impact on the total demand supply, and both from the Indian side, both from the export market side. We have to see both things, and we have to watch. We cannot say exactly whether we will be able to maintain the 16% as of now. We do hope that there will not be much variation, but it will be definitely, it may not be 16%, but definitely it will be reasonably good margins.
Right, understood. I'll get back in the queue, sir, and thanks for the clarification.
Okay.
Thank you, sir. Ladies and gentlemen, if you have a question, please press star and one on your telephone keypad. We have next question from Puneet Mittal from Global Core Capital. Please go ahead.
Hi, thank you for the opportunity. My first question is related to the shrimp processing. And can you just tell us briefly what is the market size for value-add products, not the raw shrimp, which is being exported from India? And what is Avanti's share in that? And how do you see that growing over the next 2 to 5 years?
Can you please?
So right now, I cannot give you exact numbers on the market size, but I can give you a perspective because the data when we export, the HS code is the same for the whole shrimp segment. So when coming to like the perspective of exporting value-added products, India still is a commodity supplier. We do large volumes of a commodity product to the US market and the EU market and also China. As compared to much more advanced countries like Vietnam and Thailand, where they do high-value products, which has a lot of them are still not introduced into India. So so the target of the company is to develop such products in India and export them. And coming to the value of the exports itself, Avanti's market share in export of shrimp itself is very low, lesser than double-digit number of the total exports. So there is both a scope to grow in terms of the market share and also to develop high-value products in India which are not being developed.
Okay, that's great. The second question is on the feed side, and if you can give us, we understand that the recent crop was harvested early, and because of the various reasons, and the farm gate prices have gone up. How is the next season looking up? How is the stocking going on, and what do you see on the ground in terms of the upcoming season?
Feed harvesting.
Harvesting. Actually, feed harvesting. Please, I did not understand your question. Can you please come back?
I'm just asking how is the next season coming up in terms of the stocking and everything, because the previous season it was an early harvest because of various reasons. But how is the new season shaping up?
See, the next season we are hoping that because the situation now is the farm gate prices are very good, very encouraging, and farmers are really looking for a good season, first crop ahead. And we expect that unless some unforeseen events like COVID-19 aggravating and all these things happens, it should have a very good first crop next year. That is, it will start sometime in the February, March it will start. So the almost every hatcheries and all are getting started. So they are getting ready for the next season. And also the news that the vaccine is coming around, and we're going to have by January, February, we're going to have vaccines, and that has given again a good boost to everyone. So that I think with this, the prices are good, and the climate is also looking good, and we are looking for a very good first crop next year. We'll have to wait and see, because we have still 2 months time, December and January. We'll have to see how because already the culture is going on now. It is in progress, and we expect that around January there will be harvesting, and again they'll give a small gap, and again in February and they start stocking. So we are looking for a good first season in 2021.
Okay, understood. Thank you. And I have one just comment, suggestion, however you may take it. I have not asked the question on what's the plan with the cash because we have various shareholders have asked on the previous calls, and I think the answer has been pretty much standard. But the cash pile has been going up dramatically. Now, of course, you do want to save for a rainy day, and you want to make sure that for the expansion you don't have to incur debt and all. But given the level of cash that's there on the book, just there is no way that on a lateral expansion that you will need that kind of cash. Now, and also at the same time, the stock prices, the valuation of the company is cheap in terms of what the company is really doing and the potential of the company. So there, I think there's a very strong case for the board to consider a buyback, given the fact where the prices are as well as the cash on the book. I mean, even the best companies in India, the blue chip companies like TCS, Infosys, and the global companies like Apple and Berkshire, they all use their cash to buy back at the right time, and there's a very good reason for that. And I think the board really need to now look at that because the cash is quite large on the book, and we will continue to generate decent operating cash flows going forward as well. So I would really suggest if someone can take this to the board of directors, that this has been a consistent question and theme by the shareholders and the analysts. Thank you so much.
Thank you. Thank you. Your suggestion will be placed before the board. Definitely we will do that. Thank you.
Thank you, sir. We have next question from P. Narayanan from BNP Paribas Mutual Fund. Please go ahead.
Yeah, thanks for the opportunity. And I think, in line with the previous participant's question, I will also kind of echo those comments on capital allocation. If you can kind of, articulate what's the plan, because, in a single first half, you've kind of generated an operating cash flow of about 470 crores. So for expansions, we're not sure whether, one is not sure whether you're going to need so much cash requirement. So coming on to my first question, if you can, kind of also, spell out, what's been the progress as far as some of the, initiatives that we took as far as fish, side of the business is concerned, and also the Indonesia JV, along with the, foreign partner Thai Union is concerned, as the progress,
See, the Thai Indonesian project is actually basically the Thai Union project. We don't have much. It is only a small investment that we have in that. But as far as the investments further are concerned, as your previous investor he asked this question, that the cash which is available in the result that has been already in the notice of the board. And see, the situation we have to see, which is the very cautious in taking a decision with regard to the investment, and also it should be safe, secure, good return should come, and there should be value for that the investment that we make in the project, any project we select. So definitely, as some time back, our CMD also said regarding the fish feed. We are looking, but still the time is not right to take the final decision about that. The issue is before the board, how to go about it and all. We will definitely take it to the board's notice about the concerns, about the reserves that we are holding on that. We will definitely do that.
And on the fish feed aspect, sir?
Fish feed project, we are working on that. As I told you, the time is not right to see. We have all the wherewithal, like technology and so on. Everything is available, but only thing is we are looking for a right opportune time to see that that we plan this project as soon as possible, provided the situation is conducive to take a decision. But as of now, as you know, with this COVID-19, entire situation is very dicey, and we have not been able to really, go ahead. with any of the plans for these expansions.
Sure.
We will
But
definitely
if
at the right time.
sorry, sure, sir. And if at all, do you believe, as far as the PLI scheme is concerned, could there be a big project that could entail this kind of a capex? If you can also kind of articulate if there is any capex intensive part of the value chain which could come up as far as the PLI scheme is concerned, if you can also kind of give your thoughts on that.
See, the PLI scheme which the government has announced, it doesn't appear to be very lucrative as of now, because the more details have to come, and what are actually the objectives, because they have put so many industries, and how much they are going to allocate to the fishery sector is also a question, and what kind of incentives that they are going to give. Is it for production alone, or whether it is for infrastructure, or what the minds that the government is thinking, we do not know. We are waiting for that. And as you rightly said, we have got so many other things that we can consider in this particular sector, fishery sector being in the light of the government's emphasis on this sector. We have to see how the government is going to frame their policies for incentives or the opportunities for investment, how to going forward. We have to wait and see. Nothing is clear. Everything is dicey. We have not been able to really work on anything. Just we are keeping our fingers crossed, waiting for the policies of the government. Once it comes, I think we will be able to. And apart from that, our own study is also required. We have to find a right time, appropriate time to take a decision for investment. That is already, as I told you earlier, it is in the notice of the board, and we will take a decision at the appropriate time.
Sure, sir. And with regards to the two businesses, both in feeds and processing, one was on feeds. I think the dichotomy what people are trying to understand, at least I am trying to understand, is one, you're talking about the industry kind of going down, but you wanting to have your maintain your volumes, but market share you're saying you will stabilize between 45 to 48, but somewhere either there has to be that market share number has to be higher, or the industry has to grow higher. So what's the piece that one is missing, or are you just playing conservative?
See, if you look at the last year or this thing, not much of growth is seen in the industry as such. But we have been able to increase because we have been able to perform well, and we have been able to get conversions from the farmers using other competitors' feeds. That we have been able to do it. The consistency which we have been maintaining has helped us a lot in this times of stress. That is, we have been able to keep that growth. And as I told you, this is actually this year and 21. We have to see that we out of there is a lot of potential for this industry, but only because of these situations, unforeseen developments like COVID impact and all those things, they did not grow as it was expected. This industry, but we do hope that in the next year 21. There would be a complete change in the sector's performance with the things, economy is stabilizing, and we should be able to see the real growth, further growth in 21, 22. That's what we expect.
So, sir, and lastly on this, on the processing business, we've seen a 10% drop in volumes. But when we look at the mix, there's been a considerable shift, at least versus sequential basis. Asia, which I'm assuming is predominantly China, which used to be about 1/4 of the volumes in first quarter, has kind of dropped to about 3%. Was there any reason that we could not supply that incremental volumes in China, and because our capacity is definitely a lot underutilized? So your thoughts on that aspect, sir?
So coming to the market share, like if you take the last quarter, the immediate preceding quarter, our volume to China, I mean the Asian market was significantly very high. And most of the buying for China was done during that period. And as advised in the last investor call, if you like average out these 2 quarters, it would make it be more normalized. So this quarter we didn't export as much to China because we've already exported the required volume in the previous quarter. That is the main reason. And also going forward, the Chinese market, the numbers and statistics say that statistics say that the imports of shrimp are lower, not only from India but from worldwide. And this is due to a number of factors, including the Chinese government policy on testing for the coronavirus and their internal crop, and also the consumption of seafood, especially shrimp in China. So indicators are showing that they're importing lesser shrimp, which is mainly driven by the policy of the Chinese government.
And sorry, one last thing that I forgot to ask is, as regards to working capital release during this quarter, there's a substantial release as far as working capital is also concerned. In the entire value chain, do you see that, inventory in the system is kind of low and things were to kind of restart? Would there be a restocking cycle as well which will kind of happen? And more for us in terms of would there be slightly more working capital? The best of the working capital management in terms of that is kind of already behind us. These two aspects as far as working capital and the restocking aspect.
So the working capital requirement as far as the feed is concerned, it is a continuous process, and we do not see much change in our working capital requirements because as usual, we are taking the raw material inventory as per the 15 days to 1 month in case of the normal locally available raw materials like soya, wheat flour and all, 1 to 2 months depending upon the season in the case of fish meal. So this is a routine ongoing exercise, and we do not foresee much change in our working capital requirements. We continue to have it. Only the advantage that we are enjoying is that because of the funds, comfortable funds position, we are not going for any bank borrowing. That is the saving that we are making in this process. That is the one important. As far as the processing is concerned, there also we are comfortable placed with because our realizations are prompt. We are very prompt in payment of raw materials. So we do not working capital chain as far as both the feed as well as the processing divisions are concerned. Both are very comfortable position, and we do not foresee any requirement for increased working capital requirements in both the units. Okay.
Sure, sir. Thanks a lot, and all the best.
Thank you, sir. Next, we have a question from Deepesh Kashyap from Equirus Securities. Please go ahead.
Hi, sir. Thank you for taking my questions. Sir, in the presentation, you have mentioned that you are targeting a similar feed volumes for FY21. So I just want to understand what is the guidance for the processing volume, sir?
Processing volume or feed volume?
No, feed volumes you have already given. So I just want to understand what is the target for the processing volumes for the end of the year. Last year, I think we did 13,400 tons.
It would be around the same volume, about the same volume.
Okay, because first half we have seen a decline of around 10%. So you are saying that full year we will complete at a similar kind of volumes.
I mean, Deepesh, to answer on this again, it depends on the market orientation. If you see, like what I answered in the previous question, we're not doing as much as volume to China as we were doing. If you see sequentially, our volume has decreased, but our profitability has increased. So as we continue to go on to higher value products, the volume will decrease because the price per unit selling price increases per product, and we're targeting that. So the volume might slightly decrease, but we're also looking at doing more volume in the value-added product itself. They're working on that. So there's a lot of factors that we're looking for coming to the first half of next year, which is basically how the market opens. Will the product pull in the Thanksgiving and Christmas season really be good? So those are important factors also. But otherwise, if everything remains constant, we should be around the same volume or a little bit lower.
Okay, great. Nikhilesh, in the last call, you also talked about that you were thinking of expanding the processing capacities, but due to COVID, you kind of halted. So now, is there any clarity that you want to expand the capacity and by how much?
It's not the capacity. We want to increase the utilization. Basically, there's no great capex or new factory or anything that's coming up, but just increase the utilization. And as you know, like most of the processing business is a highly manpower-induced business. So when COVID did kick in, the number of worker footfall in the factories reduced, and now it's normalized. So we are again going back to our increase in capacity utilizations. We're using the provisions that have been given that were made during the construction of the new facility. So that is the target. That's why I had said that the volumes will almost remain the same, even though we're not doing like highly commodity business like China. So that is the reason which will get us back to the same volume levels. If everything goes well, we still need to see how this COVID effect comes in for the next 1 year, right? So if everything is okay, we should be showing higher utilizations from the first half of next year.
Great. Thanks, Nikhilesh. Rao sir, I just have a question that one of our competitors highlighted that the fish feed segment is seeing a lot of traction post this launch of Pradhan Mantri Matsya Yojana in some states like Punjab, Haryana, etc., where generally the shrimp culture doesn't happen. So just wanted your assessment. Do you also see a similar kind of fish feed potential that can come up in some of the states where otherwise there was nothing before?
Definitely, Punjab and Haryana, there is actually the government, this Pradhan Mantri scheme they are giving. But we have to wait to see that the schemes really work out for the farmers. There it is more Punjab. It looks like that they are more in the the startup companies. They have got lot of they are introducing new areas for fish culture or shrimp culture there, because they're utilizing the water bodies that they have. I think that is what that's happening there. But the real impact of this Pradhan Mantri scheme is yet to come. See, particularly in the places like Andhra and these places, Gujarat, Orissa, and where there is already the advanced stage in West Bengal and an advanced stage of this fish culture or shrimp culture. We have yet to see that. Those are the areas which they have identified which is the potential for this. That's what there is some sort of, the news making that it is going to help a lot. But here we have to really see what exactly this Pradhan Mantri scheme is going to help. As of now, we have not seen any big, advantage coming. Or even most of them, the schemes have not been really put into practice. They have been saying so many things, but nothing has grounded. None of the schemes have been grounded so far. So that we have to wait and see, Deepesh.
Okay. Sir, also, is there any update on the Vaname introduction in the Bangladesh? Because I think last time you spoke about that. So has Vaname been introduced in Bangladesh, and do you think of expanding into that country as well?
Yeah, because I do not have the update on that, but still I think it is with the government. That's what no decision has been taken, but we'll come back on that because I don't have right now what is the status of the introduction of Vanama in Bangladesh.
Understood, sir. So lastly, any clarity on the new aquaculture bill that has been passed by the AP government? Any difference you are seeing on the ground in terms of more regulatory interference or anything like that?
It is an ongoing process. They keep asking for the information. We keep giving it. That has become a law now. That's become a law. So we have to follow that. But only thing is the procedural things which they have. Since after the Act, they have introduced the rules, which actually the entire implementation of the provisions of the Act is in the form of rules. So now the fresh licenses and all, it has to yet to start. They have started some quality controls and all they have started, but the real procedure for giving the licenses and all, it should to start now.
Yeah, sir, the law just mentions about the penalty and the procedure things, but anything on the, sir, is there any risk that they might control the price of feed in any manner? Do you anything on that?
See, it is too premature. It is too premature. Just it has come. So the first thing is that settling down, and they have to get the grip of the sea. So many things are happening in this very dynamic situation. Suddenly the material is not available. Then how the government itself is working on that. They are doing a lot of work on that. But still, they seem to be still have not come to the grip of the total situation to implement it by the letter of the law. That I think they are working on that, how best they can use the law in implementation. That's what it appears to be. But we are also getting ready with. We have to get ready with the the compliance of the Act.
Thank you, sir. Due to time constraints, that would be the last question for the day. Now I hand over the floor to Mr. Sherwin Fernandez for closing. Over to you, sir.
Thank you, Haneda. Thank you to the entire team of AVANTIFEED for giving us the opportunity to host the call, and we would also like to thank the investors and the analysts for their participation. Thank you and have a nice day.
Thank you, Sherwin. Thank you, Pavitra.
Thank you, sir. Thank you, sir.
Thank you, sir. Ladies and gentlemen, on behalf of KFin Technologies Private Limited, that concludes this conference call. Thank you for joining us. You may now disconnect your lines.